Good morning, everybody. Good afternoon to my friends in Europe. I am Mark Sebastian, your only option. I am joined by our Imperial Overlord of Income. He is Hans Albrecht, and this is the Ticker Highlight Show. Just a two-man show today. Alicia is on assignment. I have her inspecting a candlestick and pitchfork factory. So I sent her to an industrial park.
There are tariffs on those. I don't know what the tariffs are on those things, Mark. It's
so I've got her on that, and then Andrew's on assignment as well. He's currently exploring hatcheries in off the Maine coast. So, and he'll be back with a report. So for today, what we are doing is talking about what's happened and what we see going forward, and an actionable idea around it. So, I wanted to start with kind of what has happened and why. Obviously, the market really kind of began. If we want to, we'll do a little 5-minute discussion here on the last couple of weeks. So here's the last couple of weeks, right? And the market really began selling in earnest overnight on the 2nd and into the 3rd. We bottom out on the 8th. You know, look like we're actually maybe going to completely fall apart on Wednesday at one point. We break the low from the low close from the 7th and look like, hey, we might really fall apart. And Trump announces that he is putting a hold on the tariffs, and we rip. And since that rip, we've just been kind of chopping about. So why did Trump pivot? Why did he pivot? And it had to do with bond market. And that is the culprit behind all of this. The bond market has been ugly, and we can just look at TLT. The bond market's been as ugly, if not uglier, than the stock market, and has recovered even less. And overnight, when liquidity is a little thinner, we are starting to see some wild moves. There was a crazy wild move that night, the night before he pivoted on tariffs. That pivot is what caused that huge rally. And that pivot kind of stopped the bond market from falling apart for the time being. And if the bond market stabilizes and you know the 10-year doesn't get back above 4.5, and the 30-year doesn't get over 5, and we don't see a big hedge fund blowout on a Fed carry trade, then peak fear is in. We're hitting earnings season. We're probably maybe melt a little lower, and eventually we'll find a new low, and but volatility won't be very high, or we get a little some positive news, and the market just starts rallying from here. On the other hand, if the bond market breaks, the stock market is going to get obliterated. All right. Now, I don't believe that the latter is as likely as the Twitter verse, the X verse seems to think, but it is a risk. Now, if that doesn't come to fruition, and again, I don't believe it will, then the trade I really like is to go out, get some long-dated calls in some companies that you believe in or you like. So I was looking at long dated calls in Google, for instance, which of these, now they've got a lot of risk, right? They've got a lot of risk with AI. But
Agreed.
Google is cheap on a price earnings ratio scale. Google is not expensive. Neither is Meta. But Google in the teens, who'd have ever thought we'd see that? Google with a price earnings ratio, at 18. About that's low. So my thought was, at a certain point, you say, I want to take a risk on some long dated calls on the odds that we do get a recovery. Now, do I think the recovery is going to be like a crazy V? No. But is Google likely to be higher than $148 at the end of the year? And if so, how much? And my thought is, it could make a run back toward 200. So that's where we are. That's kind of what's happened and where are we going and what are the levers that are going to make that. All right. And if you read the letter that we wrote, that we put out to you over the weekend, I go through kind of each of the kind of risk factors I'm paying close attention to kind of guide me as we're trading. All right. Now, if we want to unshare, Hans, welcome.
Morning, Mark.
Good morning. Now, I asked you kind of to summarize your thoughts over the weekend as well, and you did a great job at it. And I think, why don't you kind of sum up real briefly, what do you interpret of what's happened, and what do you see going forward, and maybe a trade idea?
Yeah, so I mean, I agree with you that bond vol is the thing to watch. A couple of weeks ago, we saw the VIX come in significantly with that bond put, with Trump kind of saying, "Uh-oh, we don't want things to break." But even still, we saw the big drop in VIX. We saw a drop in FX vol. We saw vol drop everywhere except in the sort of TLT, right? So TLT vol really soared. So definitely that's the thing to watch. I think we could revisit 5,000. We've had there's exceptional selling going on around the world. This sort of, US sort of exceptionalism trade has kind of unwound a little bit. Now, I think that could reverse and start to come back in at some point. But really, that is sort of what we've got this year so far is a kind of 180 from what people expected when, after the election, sort of literally the opposite of what people hoped for, which was a big support of the economy, of the stock market. And then I remember seeing a chart on the weekend showing how foreign buying absolutely exploded in the last quarter of 2024. Retail buying exploded higher. Sentiment went basically parabolic. So there's a little unwind going on in all of that. And some things are getting cheap, like your Google, right? I think there is a big risk to search. In fact, I think, I'm even finding myself using AI a little bit more, as opposed to sort of going to Google and dealing with 8 or 9 ads and not getting the information that I want necessarily. And I think that's a very, very serious risk. In fact, I was just putting together some numbers this morning. Search is about what, 56, 57% of revenue. I thought it was actually a little bit higher than that.
Yeah.
But it's a pretty significant portion of revenue. Now, the question always is, with the stock market versus reality, as well, at some point the stock market prices in a certain amount of negative information.
Right.
And that's always kind of our efforts are always to kind of figure out where that is. So at some point, Google's going to be interesting. And they do have other things going on. I think YouTube's the greatest asset in the world, one of the greatest
Yes.
assets, et cetera. So I think, I think it's been a very interesting year. I think one of the lessons has been, don't ignore the risk gauges. You and Andrew, I know, and myself, we always talk about the VIX futures. We talk about some of the easier things to watch, and there are some very easy things to look at in terms of the VIX and even just the level of VIX, but in terms of the underlying future structure there. And so I think don't ignore the risk gauges. And certainly we've seen a little rally here lately, but we haven't really seen a massive relaxation in that curve, have we? So there's sort
No.
of still quite a bit of nervousness. Now, is it absorbing from the bond market and other things? Of course, probably. But I think that it just shows that there's some durable fear out there. So it's a trader's market, which is what we're all about. And I think you just want to kind of you want to sort of pivot. And I've been talking about this. I put this out months ago, and I said, don't keep getting stuck in the same old names. Like, look around. There's a big stock market out there. There's some things that are doing okay, and I'm going to talk about one of them in a moment. But there's sort of been this move from a little bit, zeros and ones and digital and things in the ether to a bit more touch and feely. People kind of going back to, okay, what's real? What is real out there? A little bit. And I think that's interesting. So is that sort of a durable theme for the year? It could be. The big question is going to be, well, do we suddenly get a resolution of the tariff situation? And that just changes everything. Maybe we get a 500-point rally if that happens. So that is just the sort of looming kind of headline that could happen at any moment. But if this goes on, it's going to be a little bit challenging out there. And then another one is just respect the charts, right? A picture is worth 1,000 words. Don't fight the chart. Look at it, respect it. Look at what Leisha is doing. Look at what you're talking about every day. If the moving averages are pointing down, they're pointing down. They're telling you something's not working out right now. So, try to focus on things that are working for you, unless you're playing, if you're playing the short side, then great. And then have the right tools, right? So in Turbo Income, we use the MTI, which went red sell at 59.97.
Oh, wow.
Before the S&P dropped 1,000 points. So this is just one of the tools that we use. And so try to use the right tools, try to use the right indicators. It doesn't have to be complicated.
No.
And help to keep yourself on the right side of things, in your lane, right? But because the market is very noisy, you get distracted. So what do you do? Well, I kind of like those touchy-feely things. I've been talking about low vol stocks and things that that are acting a little bit better. Some of the real stuff out there, toothpaste makers and things like that. It's not exciting. It's not Nvidia necessarily, but they're real things for real people. And so I kind of think those places are interesting places to hide now. But even on the digital side, on the tech side of things, I think there are some interesting pockets. So my stock for today is NVIDIA. Now, this has been in Turbo Income. I have a long-term hold list that we are going to apply income strategies to. And one of the names that has been in there for the entire time is Netflix. And so for me, this is a good kind of area that straddles, technology and what people are really going to want and need and not get rid of. So it's, of course, a very, very successful company. It's grown incredibly well over the last many years, but the idea is that it is a little bit defensive at this point, right? So if people are cutting back on theater visits and concerts and sporting events and expensive dinners and things like that, guess what they don't cut back on? They don't cut back on Netflix. In fact, one of the best embedded features, and sometimes it's better to be lucky than smart, but since Netflix created this ad tier, you can drop to the ad tier and save a few bucks. And guess what? Their ad tier is more profitable than their premium tier. So either they keep people or people downgrade to an area that's actually more profitable for them. And $7 or $8 for unlimited entertainment. I mean, in this day and age, that is pretty awesome. So I think that is something that has a good story. Is it as cheap as Google? No, but as we know, narrative stories are very important, and people are going to look for the stories that kind of make sense. Now, do I think it's going to a 2000? Maybe not, but it's a little bit defensive. It's a little bit of a kind of safety type play, but one that still has a lot of growth. They can still grow around the world. And they kind of have this sort of network effect, right? The bigger they get, the more power they have, the more people want to create content for them. People just sort of flock to that sort of middleman in that space, and they just get more and more and more powerful. So I think that's a really, really cool place to be. We had earnings, which are good on Friday.
Yes.
And it's pulled back a little bit. I think last I looked at it, it had pulled back to almost
Yeah, it's up about 1.4% now after being up a lot more earlier in the day. Yeah, Hans, I agree with you. I think, I'm hesitant to jump in the day after earnings because I want to see how this plays out with both paper and with price action. But you circle back to this one, the MTI on this stays green, and you circle back this one in 2-3 days, and it's just been kind of holding in place here. It's going to be a really interesting long, and I definitely see why you would like this as an income play.
Yeah, and sometimes those income plays can be interesting after an event like earnings because the news is out. Generally, I'm not a huge fan of being an option seller and option harvester ahead of a big potential event, but afterwards, you can still get this sort of lingering option pricing in there. So, and in fact, you're kind of seeing that. I'm not seeing the option prices really get crushed today. So, that's probably just part of this overall market that we're in. The VIX is up, a little bit. There's a weekend effect, but the VIX is up, and so people are still nervous going into a lot of tech events, tech earnings events. So, but we're not seeing a big crush there. So I think that's an interesting play. Can it pull back more? I would like to see that as an entry point. Because of course, when the market does sell off aggressively, they'll get to everything, right? They'll get to Netflix, they'll get to Costco, they'll get to things that have worked because that's what they do in a big sell-off. But that creates opportunity. So those are the kinds of names that we have on our list that we're looking at that represent something that isn't impervious to a sell-off, but has that ability to bounce back. We saw Netflix drop into the 800s. Now it's almost making all-time highs again this morning. So I like to see that kind of strength, quality, stability, strength is what we look for in turbo income.
Absolutely. All right. So keep this one. We'll keep, for those of you on turbo income, keep this one on your MTI meter, and we'll probably circle back to this one next week, or maybe on Friday's show, and then in Google, the trade I'm looking at, and I gave you the trade, the January 2026. So these have 9 months. 9 months. I'm looking at the 175 call for about $8 and $58.60. I want to buy that call. Kind of sit on it. The stock doesn't even need to get to 175 for me to make a really good money on that call. If we get a rally quickly, or if there's a few agreements here and things reflate quickly, we can make a lot of money fast on those calls. So that is going to be the January 2026, January 16th, 2026, 175 call for $8.60.
I like that, Mark. I can see that. I'm looking at the chart right now. I can see this thing getting back to 160, 165 fairly easily.
Yeah. And then you can make a decision. Do I just flip out of this call, or, do I think Google's going to keep going? So, William, hey, would this be good for kind of a leap diagonal? Yeah, it would, William. And there you go. So, So, folks, there you have. We've kind of given you a really good name to keep an eye on, and then we've given you a trade that you can take action on. I'm going to be taking action on this. It'll be in the portfolio here in the next 10 minutes. And so for our friend Hans, the Imperial Overlord of Income, I am Mark Sebastian. I am your only option. Oh, and if you have not, I'm doing this masterclass. You know, we're going to kind of explore. William asked me about diagonals. We're going to explore how kind of every single strategy I run is kind of, you know, the thought process there, what you need to understand, what's behind it, and kind of what the requirements are, right? How much work is it to do? And then I'm gonna kind of show you how I got into that type of trading, why, and what I do now. So if you want to kind of learn on a strategy by strategy basis, order flow, zero DTE trading, spread trading, and trading from the long-term trading using spreads. This is for you. And one of those 4 strategies will fit you, which is what we're trying to teach you. So if you've not registered, click the link above. You got questions, give my team a call, 888-872-3301. If you're watching me on YouTube, please like, subscribe, leave a question about a stock. We're happy to answer them. All right. So for Hans Albrecht, our Overlord of Income, I am Mark Sebastian. I am your only option. Have a great, great trading week.